FX Street, who's alive? Okay, testing, 1, 2, 3, testing, 1, 2, 3. The Wayne in Spain stays mainly on the plains. The ants in France stay mainly in your pants. Good morning, everybody. FX Street. Hey, welcome to Non-Farm Payrolls. Where are we at now? I forgot to look. Where are we at? 190 months? Well, I hope I can get through every single minute today. Honestly, I don't think I'm going to be able to get through 3 hours. The last 48 hours I've spent in bed with vertigo. And it showed up again this morning, and whoa, is it 189? That ain't bad. So anyways, you're moving right now. Whoa, why are you spinning? Because I'm sitting in my chair, but you're spinning. And the interesting thing about it is it's a lot like seasickness. So while I sit here in my... Hang on, I got to change this chat. I don't know what the text is doing here. But it's a lot like seasickness. So I'm sitting here doing nothing, but I want to vomit. Oh, I see what I can do. I can do that. Delete. Okay, that should be better. So anyways, it's not funny. I'll give you an example. Yesterday, my cell phone was at the side of my bed on the nightstand. And I looked at it and it was beeping at me. And I'm like, I don't think I can reach that. But I turned my head and I moved my arm to grab it and I threw up. So anyways, I'm here with you today, despite all that sob story. But honestly, I don't know if I can get through 3 hours. So let's see how we do. So anyways, let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, not necessarily indicative of future results. Please stay small. Stay humble, focus on the long term, never risk money you cannot afford to lose. And by the way, my name is Wayne McDonell. I'm a currency trader just like you. If I were to introduce myself, I'd say, well, I've been doing Forex for about 20 years. It's the first thing I ever traded. I never really traded stocks before, and I didn't know anything about commodities or macroeconomics. I knew nothing when I started, literally nothing. There was no technical analysis. There was no books on Forex. Amazon.com hadn't been invented yet. Barnes & Noble had no books on Forex except Forex Made Easy. So then I went to the Stanford bookstore to try to find stuff on international finance and Forex, and there was nothing. So that's where I started from. The reason I never traded stocks is before being a Forex trader, I was a venture capitalist. And I was just promoted to vice president of the firm. We had hundreds of employees. I had this beautiful office in downtown San Francisco with a view of the San Francisco Bay, Treasure Island, the Bay Bridge. It was right next door to the San Francisco Fed. Really cool. Before that, I was a high-tech startup entrepreneur that I almost made billions. Almost made billions. And before that, I worked at NASA. Yeah. Oh, and before that, I had a paper route. Did I mention though that I worked in the nonprofit world for 4 years and end up sitting on a board of directors with George Soros and a bunch of others? But as far as Forex is concerned, George Soros is the guy that broke the Bank of England. So, he put his arm around me and said, son, let me teach you everything I know. And I'm like, okay, Georgie. And here I am. Well, actually, it didn't work out that way. But wouldn't it have been cool? Wouldn't that be cool if you were 20 and George Soros said, let me take you under my wing? I'm like, okay. But didn't quite work that way, but a little bit interesting how I ventured toward Forex anyways. So being like a venture capitalist, for example, why would you ever want to trade the stock market and pay $180 for a stock when you could have paid 80 cents for a stock? So anyways, that's what I bring to you today. And what does it actually mean? It means I'm a businessman and I look at Forex as a business. So I'm going to be risk averse. I want to do planning. I want to have strategies. That's my edge, if you will. So that's that. Any questions so far? I'm also the chief FX market strategist for Traders Way, a boutique foreign exchange trading firm that would love the opportunity to earn your loyalty, your respect, and therefore your business. They would like an opportunity to become the execution partner to your successful Forex trading business. And what might lead to your success? Well, that would be maybe a role model of what to do and what not to do, and that would be me, but maybe also education. Education may not necessarily make you successful, but it might help. Perhaps you'll stand on the shoulder of giants instead of trying to reinvent the wheel. I started from nothing, and that's a terrible place to start. So maybe we can work together, help you find the confidence you need to trade real money. And then when you're at that point, maybe you'll trade with Traders Way, fast execution speed, narrow spreads, wide swaps. Why don't you start the woo, don't move your head. Woo, spinning. Hang on a sec. Spinning. Why don't you reach out, tradersway.com, open up a demo account, and give them that opportunity to earn your loyalty and respect. Huh? So here he is, and here we shall be. Just trying to get this set up just pretty. I want to be pretty for you. Okay, here we are. Here he is. What do we see? Oh, that's yesterday. All right, what do we see here? Nah. So I guess if you average that out, that'd be sideways, right? I wonder if we could actually. Have I done this before? Dang it. There we go. Okay. Shows you a bit of the slope, maybe, if you're trying to decide what does it mean, Basil. That might be an interesting way of looking at it, huh? Over that time period. Now, I have this pretty sensitive, okay, so I'm looking at the very much the now. This might be a better way of looking at it, sort of more of a medium term. Okay, I don't know how far back you want to go, but that's from the first of the year. Okay, that's from the first of the year. So we can go back and plot that. Now, does anybody know what my outlook was for the dollar starting in January 1st for at least January? What was my monthly outlook for dollar? Who knew this back in December? Yeah, it's way, 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 way early, Stevie. Okay. No, strength. Mahai says weakness. That's for the year, but not for January. There's a difference. Just gonna put the logo there. Okay. And that's not a fundamental call, by the way. That's a seasonal call. That's based on seasonality. W said, what? Yeah, seasonality. Yeah. So interesting. That's somewhat up. Let's go to this one. Now, for the same period, what did I expect for January for the Japanese yen? Strong or weak? And while you answer it, maybe this will, set the stage a little bit. I almost always trade the dollar and the yen the same way. No. Kevin, be careful. I didn't say risk off. Okay? Don't say that. I'm talking about seasonality. That has nothing to do with risk. And the answer is actually still weak. So even though 90% of the time, or let's say 75% of the time, I'm selling dollar and selling yen, or buying dollar and buying yen, but based on this thing I call seasonality, it's not the same in January. So no matter what's happened on your charts, I'm doing okay on this one. But remember, it's not me. It's 20 years of research. Wayne, is your fundamental bias changed because the Fed might QT this year? No. No. In fact, we talked about rate hikes and the end of quantitative easing a year and a half ago. Back when inflation was zero and interest rates were zero. How many people attended my FX Bootcamp live stream called Off the Charts with Wayne McDonell? I believe it was in the summer. It was a warm day. I did it from outside. It's called Off the Charts because we don't use charts. And what I did was I smoked a cigar. I think I had a bourbon. And one of the things I talked about is 2022, and this is back in the summer of 2020. The summer of 2020, a year and a half ago. Interest rates were zero. We just finished the stock market crash and the bit of a recovery. Inflation was zero. And I said, by 2022, we're going to be back to, the employment situation will be much better. We will not go back to 3% unemployment. We will reach about 4%, and then the labor force participation rate will come back, and we will stay around 4%, maybe even go back closer to 5%, and that will be the new full employment. And at that rate, when we get there, there will be some wage growth and inflation. Is that 100% true? It has to be 100% true. If it's only 90% true, then it's nonsense. It's either 100% true or false. Yeah, but that's what we talked. I think it might have been June, because I think July I wouldn't have been doing it, right? So that would have been May or June 2020. So has my fundamental bias changed? Why? Nothing in my opinion has changed. Huh. Well, that's the power of fundamental analysis then, isn't it? Yeah. And it's another reason you can write off your cohibas in your taxes as a business expense. Wouldn't that be great? But I need cohiba. But anyway, so anyways, going back to that Mahai's question, has my fundamental bias changed? No, it's exactly right. Cool. I wish I could tell you that I learned all that by getting my master's degree at Harvard, but they didn't teach me that. So, yeah, save your $100,000. Boy, I'm exhausted already. All right, so anyway, so we got that going on. Swissy down, dollar up, yen down. Okay, Swissy makes sense. Yen makes sense, and dollar makes sense. Now, typically these three are doing the same, but not this time of year. So somebody said risk off. No. Yen down, Swissy down means risk on. The stock market is up, somewhat. Now, I'm hoping that non-farm payrolls freaks the market out. I hope we get crazy volatility. And in fact, if I had, by the way, I have no idea which way the market's going to go. I don't even know if it's a good number if the market's going to go up or if it's a bad number if the market's going to go up, honestly. Because here's what could happen. Bad numbers mean the Fed is not going to aggressively increase interest rates. And therefore, that would be good news for the stock market and the stock market rallies. You see this? Do you understand that point? In the process of valuating, right? Here's one way of figuring out let's not pick on Apple. What is the value of Amazon? What is that? AMZN? Is that the stock symbol? Okay, this is what your grandpa did. Okay, the expected return of a stock is equal to the risk-free rate of return plus the beta of the market times the expected return of the entire market now. So this would be the expected return for Amazon versus the expected return for the S&P 500 or NASDAQ or wherever it's listed. Okay, minus the risk-free rate of the return. I think that's right. Okay, does anyone know this formula, CAPM? Is that right? Okay, another way of looking at it would be like to say the present value of Amazon's, let's say, revenue or profit, okay, is equal to the future value over 1 plus, hang on, that's not a 1. 1, okay, to the n. And n is the period. And so right now, when you do this calculation for Amazon, you will find that based on the actual stock price today, they're doing this calculation 28 years in advance, which means if you buy the Amazon stock today, okay, you are basically buying their profits 28 years from now. Something like that. I don't know what the number is. I don't know the multiple here, but think of it that way anyways, right? Okay, so which one do you like better? Which formula would you use as an analyst to calculate the fair market value for an Amazon stock? Okay, the discounted cash flow, right? The DCF, that would be the top one. Matthew likes the bottom one. The expected return of a stock is equal to the risk-free rate of return plus the beta times the expected return of the market minus risk-free. So what are we talking about right now? What's in the lexicon? What's in the zeitgeist of the market right now? Well, in the bottom one, we're talking about the risk-free rate of return, which would be RF now. Let's do this, and I have to make it a little thicker. RF is equal to the 10-year T-note. Okay? RF now has gone from, just in the last week, from 1.4% to 1.7%, 1.75%. So this number is going up. What does this mean in the math? If you plugged in the value of the NASDAQ, and if you plugged in the value of the stock, and you plugged in the beta, which is the market value. Okay? Actually, I'm not, Johnny. So if I vomit, I'll try to keep it away from the mic. Okay? I'm actually very, very dizzy right now. So how cool, right? This is, if you're learning something new today, good. This is the worst I can do. So I hope I'm adding some love here. Yeah. All right. So if you do this, guys, realize that interest rates going to all the way to 1.75 and then to 2 and then to 2.5. This lowers the value of Amazon. Okay? Do you see that? That's how the math works. Now, on the top one, it's not the risk-free rate of return, which is the 10-year T-note. It's interest rates. So if the Fed raises interest rates over the course of the next year, but remember, Amazon's multiple goes out many, many, many years. So let's say next year they raise to 0.5%. Okay, in 2023 they raised to 1.5%, and in the coming years we go all the way to 3%. Okay, so if you skip in period N, it's 0.5. In period, which is N, the first period would be 1, the starting year. The second period would be next year, which then you'd change this to 1.5. And then third year, you'd change this to 3. Okay? So let's do it this way, just so you understand the math here. Okay? By the way, do you guys like math? I hate math. All right. So if I make a mistake, let me know. Is equal to that plus the future value of profits in year 2. Future value, you have to discount this, right? That's why we're discounting it. Over 1 plus, sorry, this one is 0.5. I have to erase that. 0.5. Okay? 1 plus 1.5. I don't want to do it that way. I want to... 1. Oh, that's a 1. That's why. Okay. To the second. Plus earnings that year discounted by 1 plus 3 to the 3. Yeah, and this is what this is called your discounted cash flow type stuff, right? Raymond likes math. It's better than pulling a tiger's tail, right? So anyway, so here's the thing. This increase from 0.5 to 1.5 to 3, what does it do? It's discounting the value of those future cash flows, which haven't happened yet. But if you're buying the stock, you might be buying year 18. If it's 18 times today's earnings, then you're buying the profit Amazon will make 18 years from now. You're like, what kind of idiot would do that, right? But anyways, that's what's happening. But you find, though, as these are expected to go up, then the future value of that future cash flow is diminished, which means Amazon's stock price needs to come down, because what happened is when people bought Amazon last year and this year, they were basing it on interest rates being 0, 0, and 0. Well, it ain't 0, honey. It ain't 0 no more. We got high inflation. We got high wages. We got high costs. That means that wasn't priced in. 2 years ago, people were not pricing in 7% inflation. You understand that? Well, now you got to pay. How do you pay? Well, Amazon's going to be less profitable. And that price needs to come down. Now, come on. Pour some sugar on me. Are you going to click the thumbs up button and get FX Street some good algo juice? Thank you, FX Street. Thank you for hosting. 189th month, or right? Thank you. Come on, guys. Show some love. That's cool, right? You guys like doing the math? Okay. Yeah, cool. Now, come on. Can your other guru do that? Your other YouTube live stream guru, your Forex billionaire? You know what they'll tell you? You don't need to know this stuff. It's all in the charts. That's because they can't do it. Okay? Be careful of someone that says they don't need to know fundamentals. No. They don't understand fundamentals is what they're telling you. Wait, a professional could do all of it, right? That's like Michael Jordan saying, I don't like to lay up with my left hand, and I don't like playing defense. Remember when he first started? He's like, I don't play defense. I'm Michael Jordan. I don't play defense. Well, he didn't become better than the best. Best believed he was the baddest until he could do everything. He'll dunk you with his left hand. Okay? And is he the only person to have ever won the offensive and defensive awards in the same year? No, I don't use order flow, Matthew. Wayne, when do you talk about risk on, risk off? And when so do you talk about bearish and bullish? Well, we're going to do that now, but I'll tell you, it's risk on right now. Risk on. Okay. There's 3 places in the world you can put your money right now, right? Stocks, real estate, and what? Crypto, except crypto's down. Why? They're running out of free money. There's better alternatives. Okay. Why risk on? Just think about it. Where are you going to put your money? You want to buy the bond market? The bond market's falling. Tell me where besides the stock market you're going to invest for the long term. That's it. If you understand what is happening, there's one choice. You buy the stock market. Or a variation of that, which is like sell the dollar. Okay, somebody says gold. That's probably the dumbest thing you could do right now. Steve's going to how do I hit delete on this? How do I delete it? It's like the dumbest thing. Did you even look at it? Okay, let's do it. Let's do it. Commodities. Okay, the stock market went up 27% this year. This is what gold did this year. Okay? When we started January of last year, we were here. And when we started January of this year, we were here. Nothing happened in the entire year. The S&P 500 up 27%. Okay? My house up 10%. Okay? And you want to talk about gold? Did you not even look at it? Gold was 1800. A year later, it was 1800. What do I expect it to do next? Nothing. Why? That's what it's been doing. And by the way, you can go out to November and you can go out to even July and it was about the same, 1850. Because it's manipulated. Gee whiz. What are you reading, like Bugs Bunny economics? Is it right? Really? Manipulated? No, it's ridiculous. Okay, by the way, to everybody here, if you're reading stuff about the market being manipulated, you need to stop reading that stuff. Okay? It's just silly, and it's certainly not helpful. Okay? It's not helping you. It's sensational for sure, but it's dumb. Okay. So I'd rather you just understand what's going on. Okay? Well, that's fraud, Matthew. That's different. Okay? Now, let's talk about this. What happened? Okay? What happened here? COVID. What happened here? Central banks. I'm not going to go through the whole speech because I think I've done this before here. I've done it so many times. So I'm not going to do the full speech. This is central banks. So the question is, why would they get out of their positions? First of all, this, okay, all of this is not the normal market. This is macroeconomics. There's a reason. This is directly related to the foreign exchange market. Gold did this because central banks were adjusting the valuation of their currencies to meet their objectives. This is actually a forex play. Okay? So now you have to ask yourself, is gold going to go up? Well, if so, central banks would have to buy more. Well, if it's going to go down, those central banks will have to unload the gold that's in their vault. Well, why would they do that? See, now, if they unloaded the gold in their vault, their currency would appreciate. Do they want to? They might. Their inflation might be rampant in India, and the central bank says, unload some of the gold, let's strengthen the rupee. But for you to make that determination, you better do the work fundamentally and say that's what the Reserve Bank of India is doing. They're worried about rampant inflation, and therefore they're going to sell off gold on their balance sheet. The value of gold would go down, the value of the rupee would go up, and now the central bank has achieved their objective. But you need to know. But somebody else is saying that you should live in a cave because it's the end of the world and the zombie apocalypse is near. And I've heard so many ridiculous things about the market being manipulated in so ridiculous ways. And that makes sense to somebody that has no freaking idea of what's actually happening. So they say, well, it's aliens controlling the market from space because they're preparing for a landing and an enslavement of the human race. And I'm like, no, actually, it's just central banking policy. Okay? So be very, very careful. Okay? Just be careful, okay? And don't fall into the trap of listening to some knucklehead. Okay? I might be a knucklehead, right? But that's MIT, that's Harvard, that's Harvard, that's Harvard, and that's Oxford. So I might be a knucklehead, but at least I did the work. Okay? Those pieces of paper took me 5.5 years and hundreds of thousands of dollars. So if the other knucklehead that says you should live in your cave and start prepping, ask him how many hundreds of thousands he spent on his education to understand these types of topics. I know that sounds arrogant, but I'm just saying be careful who you listen to. All right, so 809. I guess we need to talk a little bit about what we expect. I talked about it a little bit already. I'm sorry, I'm tired. Sorry. Been sick for 2 days, man. Hang on. My undergraduate is in macroeconomics, and my master's degree is in financial management with a specific focus in alternative investing. At MIT, Gary Gensler, who now runs the SEC and is regulating cryptocurrencies, he was my professor. Gary Gensler at MIT taught me cryptocurrencies. At Harvard, I did a whole course on alternative investing. And at Oxford, I did the algorithmic trading program. So it's all spot on to the stuff we're talking about. Also, my background's in venture capital, so I understand all of that as well. I did a venture capital class too at Harvard, which was great. I got an A. Whoop, whoop. I turned down a partnership at a new venture capital fund because I was a star student. People saw it, so they're like, dude. Cool, but I turned that down because I love Forex. I did several classes on investing into real estate, both retail and commercial, so I can do all that. So anyways, yeah. So I'm doing all right. All right, so here's what everybody's looking at. We're thinking what, 450 to 500,000 jobs? Great. We're thinking unemployment rate goes what, to 4 or 4.1? Great. What else are we expecting? The labor force participation rate needs to change. See, that's the thing. Okay, the labor force participation rate, I think, is key here, because there's a technical, or sorry, there's a word that we use in economics to describe it. The labor force participation rate sucks. It's low, guys. It's like 62% of those that should be working are working. I mean, it's bad. So you almost have to laugh when they say, well, 4.1% unemployment rate. Yeah, except 40% of people that should have a job don't. Okay, and then many of those are underemployed. So you're like, wow, really? Okay. No, Matthew, I don't like futures. They're not taxed as well. They're not leveraged as much. And you don't earn income. You don't earn swap. So no, I would not trade futures. If you ask me, I'm like, no, I don't really, no. So here's the thing: if we both made the same exact trades, starting January, and let's say we make 10,000 trades this year, and we made exactly the same trades at exactly the same time. You do futures, I do Forex. I will make a little bit more money in the trades. I can use a little more leverage if I want, which is a way kind of saying I actually have a little bit less risk because I don't use the leverage, but I could. But I'll also earn swap, but also after you pay your taxes, you end up paying more taxes than I pay. So at the end, we have our pile of cash, and you'll look at me and say, that's not fair. I'm like, yeah, it's fair. I just made a better decision. So anyways, yeah, for sure, right? So I used to trade Forex, futures, commodities, right, and cash, stock, and indices. And I found out that they were all taxed differently, and my taxes were way too expensive. Okay? Yeah, same old thing, Raymond, for the 189th time. So here's what I want to get at. Everybody's looking at the same thing. So I'm not going to get too caught up on a headline number. What I expect is volatility. And what I mean by volatility is not a 100 pip move up or down, but a move up and a move down, or a move down and a move up, followed by an up or a down, and then wow. So what I expect actually is mass confusion. Okay? I expect mass confusion because here's what the real issue is. What is the Fed going to do? The real conversation today is going to be based on whether the Fed will raise interest rates in March. That's actually what we're trading today. So let's take a look. I'm sure you've done this because you look at this several times a week, but nonetheless, 66% of the market thinks what? There's going to be a rate hike in June. So here's the real question, guys. Here's the real issue today. If the headline number is like 800,000, because remember, we're only thinking 500. So if 500 happens, there'll be some up and down with some debating based on this. So we'll deal with that. We'll see it in the minutes after the news release. But if it's 800K, this number, 666, will go up. Because they'll say, oh my God, things are so good, the Fed will have to move. So this will go to 73. But do you remember my discounted cash flow? Do you remember my capital asset pricing model? If these rates go up, the value of Amazon goes down. The future value of Amazon goes down. The future profits go down. And therefore, if Amazon is based on the value of Amazon stock is based on how much profit is expected in the future, price today, in today's price, not the future price, it's discounted. So now it has less future profits because rates have gone up. So now Amazon needs to come down. The stock market could now then go down. You see, a good news can crash the stock market. Not crash, but bring it down. And therefore, you get your risk off mode because the number was so good. And you're like, wait, the number's good. So therefore, the market will rally. Ha, 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 ha. Not necessarily. So now a bad number comes out, 300K. And people are like, wah, wah, wah. Wow, everything's slowing down. Oh, it's Omicron. Oh, it's all this nonsense. But this will drop to 55, which means the Fed is still might not raise interest rates in March. Therefore, the value of Amazon does not have to come down because it's not overvalued. And the stock market rallies, and that's risk on. Oh, snap. Good news might be bad for the market. Bad news might be good for the market. We call this behavioral finance. Behavior finance. Okay? And it's the leading study of finance now. Okay? So CAP-M, which was the bottom model that I showed you, the expected return of a stock is based on the risk-free rate of return plus the beta times the expected return for the market minus the risk-free rate of return. That made sense back when your grandpa bought Coca-Cola stock. Back then, the difference between a stock and a bond was almost nil. You bought a stock, you never intended to sell it, and you earned dividends. You don't buy Apple for that. That's not what you do anymore. It's different now, isn't it? And then the other one, discounted cash flow. Well, you know, it doesn't really tell you the future. You're only guessing the future. And I think that it's pretty silly too, especially when you're doing things like, well, I'm buying this stock because I think 18 years from now, this is what their revenues are going to be. Dude, you don't even know if they're going to be in business. You don't even know if capitalism survives that long. We might be all socialist pig dogs working in coal mines for the government. Okay? Okay? Zombie apocalypse. Okay? So whatever. So this is what we're playing. How cool is that? So if you haven't clicked the thumbs up button, would you please do that? Look, I was vomiting not long ago, and now I'm here doing this live stream. And I'm actually sweating right now. So share some love, huh? I'm putting in some effort. And FX Street, they're just beautiful people. So show some love, click the thumbs up button, and tell YouTube that this is quality content, and maybe people should subscribe to the FX Street YouTube channel, huh? Jim says, down from 71% yesterday. Okay. Yeah, see? Now, I'll give you my opinion. These people are wrong. Where can you follow more about me? FXBootcamp.com. No, yeah, well, FXBootcamp.com. YouTube.com/FXBootcamp. Thank you, Adam. Hey, how's the weather today, Adam? Hot, bright, dusty. That's what I think every time, man. I hope you appreciate that. Every time you say hi, I'm like, it's hot, it's bright, and it's dusty. So, you learned a little bit about financial modeling, their relationship to either inflation or interest rates. No, sorry, yield, sorry. Their relationship to either yield or interest rates. Okay, that's not bad. And you learned a little bit about behavioral finance, that good news might be bad and bad news might be good. And therefore, and here's my last point as we get really close to the news here. Most people don't even understand what we just talked about. What we just discussed is at such a higher level that what will actually happen is the market, we're going to get the number. It's going to be low, it's going to be higher, it's going to be about as expected. And the issue with this in the next, let's say, 5 hours. Over the next 5 hours, I believe market participants will disagree because they don't understand or they just simply disagree. See, a trend comes from a market that generally agrees. Okay? So when you get let's say an uptrend in a market, and there's something that looks like this: up, 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 down, down, up, 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 down, down, up, 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 up. I want you to grasp this because many people don't. This downward move from here, okay, that's not bears selling. So what is it? If bears are, why would a bear sell an uptrend? Do you understand that? It makes no sense. You'd have to be an idiot. And idiots, they blow up their trading account and they go away and then they go do something stupid, right? They go, right? Someone was telling me that they took a real estate course from a guru and they thought it was all BS because it turns out the guru would go to like 1,000 deals to try to get things done. And he's like, that's so stupid. Like, who would go on 1,000 deals? That's ridiculous. I'm like, yeah, that's why he's successful. Like, dude, just do that. You'll be successful too. Oh, that's ridiculous. No one would do that. Well, you wouldn't do it, clearly. So anyways. Okay. Yeah, so nobody would sell an uptrend. And the ones that are that dumb, oh, it can't go up higher. Don't worry about it. They'll lose all their money. They have no impact on the market. They're not going to move the market down. They'll just lose their money and they'll go away. They're just liquidity events. And nobody really cares. And they'll go do something stupid and lazy in some other market and lose their money there because they're stupid and lazy. Wow, this guy's opinionated. Yeah. Okay, great. This is profit taking. This is the same guys getting back in. They bought it here and they're out here. They're right. They're in here. They're out here. Okay. They're on here. They're out there. Cool. How do they know to get out? Well, it's called technical analysis, right? And price action. Cool. So the thing is, we don't quite have that trend right now. So what will happen is we're going to get this today. Or even worse. Okay? So just be very, very, very careful. I think the worst case scenario is it comes out 500,000 and nobody knows anything. Is that good? Is that bad? I don't know. Is it already priced in? I don't know. But don't be shocked if a bad number is good and a good number is bad, and I've already explained that. If you don't understand what's going on today, don't trade today. Don't worry about it. You can catch it at the end of, okay? My day trading group and my swing trading group, they're probably going to catch it at the end of today, right at the, let's say near the US close, and they're going to front run. So we already have plans for tomorrow, next week. We even have some plans for the rest of the entire year, based on a combination of fundamentals and technicals. Now, it might be a bit of a stretch, but at least we're prepared. Okay? Other people, they show up and they're like, hey, what's going on, fellas? Are we going to buy this market? My answer to people like that is, well, you are about to lose your money. Okay? Will someone be so kind? How do we join? FXBootcamp.com. Would someone be so kind, either the moderator or somebody in the stream here? Would someone be so kind as to post the headline number? I will actually go out and get the report, but get the headline number. I'm not really interested in trading the volatility today. And since I'm sitting here dizzy, sweating, nauseous, and did I say dizzy? I'll probably just admit that I'm not going to be as fast as normal. But we can do this together. Okay? Now, we can do a high volatility event-driven strategy, but I don't think it's going to be very good today. Hang on, let me get this. Okay. But like I said, the big issue here is nearly 40% of the workforce isn't working. Now, I think the Bureau of Labor Statistics is ancient history. Like, they don't count Uber drivers and stuff like that. They don't count, Fiverr giggers and stuff. And they're like, really? The government, like, if you buy a diamond sword on whatever video game, they don't count that toward GDP. You spent the money. It was sold. And they don't count it towards GDP. And I think all of those are pretty silly, right? A bunch of old men making decisions. So thank you for being here. Please visit tradersway.com, open up a demo account, give them an opportunity to earn your loyalty and respect. And if you like my points of view, you can visit FXBootcamp.com. If you want, I'll give you an 80% coupon code. Let me know if you want an 80% coupon code. Oh, man, I'm nauseous. Hang on. Market's moving. Kitty cat up. Okay, $1.99. It sucks. That could be good news. That sucks. It sucks. It's so good. Couldn't be better, huh? Couldn't be better. Yeah. Dude, what happened with like ADP was 800, huh? Oh, look at this. A delay on their server. Could be interesting. Could be interesting. CAD, what was the CAD number? Okay, so you want to watch this over the day. Ha! That's where we are now. Let's see. Yeah, 66. Okay, so check that throughout the day. Market's not open. All right, so finally, it took them a long time to get this. All right. All right, today, Friday the 7th of January. Unemployment rate declined to 3.9%. What does this mean if only 200,000 jobs were added? Labor force participation rate is likely down again, which is not a good thing. It's probably down. Labor force participation unchanged at 61.9. See? Wow. So things are not going that good, but look at this craziness. Okay, 3.9%. Okay, that's crazy. It sounds really good, but it can't be true if 40% of the people aren't working. %. Interesting. Manufacturing jobs up 26,000. Construction rose by 22,000. Transportation warehousing 20,000. Sounds good, except Amazon would have hired 20,000, and then Walmart would want to hire 20,000, and then someone else, it's okay, but it's not good. Mining rose by 7,000. There's a huge shortage there because we fired all the miners to do green energy, and now because of high prices, suddenly we need cheap coal miners, and we can't find them because they all retired because we forced them out of their jobs. So it's kind of interesting. So very mediocre to bad NFP, which might be actually good. Now, the jobs out of Canada, you guys were saying, were pretty good. So that's interesting. So Canada doing aight. No real change here so far on the dollar. Swissie's coming down. So you might want to look at like a CAD Swissie play. And, oh, it's already over. It's too late. It doesn't matter, guys. Your next best trade is Monday. So this is out. I would not trade this. So, right? How about this? Let me give you a sales pitch. I'll say it again. FX Bootcamp has a coupon code for 80% off. Your total cost out the door is $77. There's 60 hours of videos. In the swing trading course, it says this low is an entry and this pink zone is where you take profit. So I look at this and I'm done. And you're like, well, but at non-farm payrolls, yeah, whatever, dude. What the CAD job report? Whatever, dude. My best case scenario here is it comes back around and somewhere between here and here, I buy it on Monday. Okay? Yes, I will give you the coupon code. So you go to and the coupon code is boom. That's it. Take a screenshot. Thank you, Brinsley. I just added a macroeconomics course, which is graduate school level economics done in easy to understand plain language and no calculus. But we will cover very interesting models, and you will learn a lot about how to analyze the strength of an economy and where it is in its cycle. You will get a very, very detailed, but again, without having to do all the calculus and math. Some of these things were taught to me by a senior economist working at the Fed. He was my professor at Harvard. He would work at the Fed all day and then come and hang out and, well, teach during the day. I also worked with someone from the New York Fed. So Harvard's a great school, by the way. If you want to go to Harvard, I recommend it. And she was on a different side of the math, really. I took 2 classes with her, and it had to do with things like minimum wage and other stuff. It was really interesting, right? Really interesting topic. So anyways, that's it. 3, 2, 1, boom. We go back here. So anyways, I look at CAD Swiss. Yeah, it's good now, but I wouldn't be trading it now. It's too late. You don't know what's going on. And oh, look at that. Oh my God. That's why you need to know technical analysis. So somebody traded the news and they're like, oh, and then they got crushed. Good. 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 Fine. Great. Cool. Whatever. Let's move on.com. Actually, it was really funny. That class, the one on minimum wage was actually, Harvard is a liberal school. And my professor, she was crazy liberal. And it was cool because, she's cool. Like she lived the part. I liked her, but she was. Anyway, so it was really funny because we watched a 2-hour video about a young woman who was a single mother and worked as a nurse and had some child care credit and stuff like that. And we watched this 2-hour documentary about her work and about her trying to raise kids and about her working in the nursing home and how she was balancing her life. And I realized we were being taught what it was like to be poor. Only at Harvard, right? So I went to her at break one time, and we all went for coffee, $7 lattes and stuff, and we were walking back to the class. I'm like, I have to tell you, I enjoyed the video, but it's really quite funny. It's actually quite funny. And she's like, what do you mean? I'm like, we're all at Harvard, and you're teaching us about what it's like to be a poor person. I said, in the context of all of this, that's actually quite funny. And she didn't get it. I still think it's funny. I'm like, okay, we got that out of the way. Now we know what it's like to get a child tax credit, and how it's like to work really hard and get paid and be underpaid, and how it sucks to try to get government support because they're right. I'll give you another example. When everyone lost their jobs because of COVID, people stopped paying their rent. So there was this program the government created because, the people with master's degrees that work in the Congress and the Senate, they thought it'd be a good idea to give everybody money for free. One of the things the free money had to go for or go towards was your rent. So if you lost your job because of COVID and stuff, don't worry about it. Don't worry about it. The government will give you rent money. Less than 10% of people that needed the money to have their rent paid for them, not just once, but for a year and a half, just free rent, $1,000 a month, whatever your rent was, right? Less than 10% of people took it. 90% of people didn't get the free money. Do you know why? You had to fill out a piece of paper, and you had to show identification, and you had to show 2 years of tax returns. Well, the people that needed the rent money couldn't do that. And I thought it was just really interesting. And people in Washington, they don't understand this. So they need to go to Harvard and watch videos to learn what it's like to be a poor person. And I think it's funny. You're like, dude, these guys are not paying the rent. They don't have money for rent. They didn't pay taxes last year. What are you talking about? 2 years of tax? What are you talking about? That's not what it's like. It's just so funny. So anyways. So, yeah, anyways. The other class I took from her was alternative minimum tax. Is that what it's called? Alternative minimum tax? No, universal basic income. Universal basic income. And that was also very interesting. So, anyways. Kiwi coming down, Aussie coming down, but we already know this. Okay? We already know this, or you should know this. So in the swing trading group last night, we sold off hard this Aussie. So that's working. The dollar's coming up. Of course, we already know that. That's based on seasonality. So to me, I look at all this, I'm like, this is basically our trade plans that we've been doing, right? For quite some time, actually. So let's take a look. Okay, pound's the strongest, so you got to be careful there. This is great because it's kicking off the M3. We already know that's not the right one. Let me redo this. I want to change this to daily confluence bearish. Okay, great. So what we already know is this is the top of the market, and therefore this is going down to 69.65. So let's just call it 70. So it will fall 136 more pips. We knew that yesterday. We knew that the day before. We knew that the day before that, and the day before that, and the day before that. This actually, that move, let me start here. That move, okay, I got together on a Sunday night the first Sunday of trading. How am I going to do this? I got to squeeze this in. Got to go in a little more. Okay. We met in the group, and our plan was sell here, target 70. That's it. Okay. Would that be helpful if you had known that? Now, what we don't know is this part. It's not uncommon, though. Okay. But nonetheless, we also do know on the weekly basis this is an out, and on a monthly basis this is an up. All I know is this is where bears sell, this is where bulls buy. Bears sold it again, and this is the last place. Can you understand this? This is the last place for a bull to buy. So you could get up, and then on Monday we sell this hard. What do you think about that? UBI will be real when robots and automation kicks in? I don't know about that. I can tell you, though, because I read a lot of Milton Friedman on the subject, and in his early works he had some hypotheses, and then later in life he changed some of the hypotheses because he said he realized it wouldn't work. You know, there's some things that over his life, he changed. Obviously, you learn more and you mature and you adapt. But he used to have this idea that corporations will always do what's best for themselves. Almost like, you know, someone, like we were taught, like the markets are rational because people are rational. People will always, okay? People always do what's in their best interest, right? Except we smoke, we gamble, we eat too much, we don't exercise enough, we don't work hard or smart. But besides that, we always do what's in our best interest. I don't believe that for a second. So with that same attitude, in the beginning, Milton Friedman would say, well, corporations will do what's in their best interest. And what will happen is, well, over his years, he said, well, that's not necessarily true. Even corporations, because they're run by people, do irrational things. Reverse income tax and stuff. Yes, but there's been a lot of things. You have to understand, too, capitalism is new. We've only been doing it seriously for 100 years, sort of for a few hundred years. But, you know, not long ago, we were debating socialism versus capitalism. And so 100 years goes by, and there's not one example ever, anywhere, at any time, anywhere, under any circumstance, socialism has worked. But we still debate it because for those that are in poverty or powerless, it sounds really good, right? You get money for nothing and your chicks for free. Sounds really good. I want to be a rock star too. That sounds great. Okay. So it's an easy sales pitch, but it just doesn't work. It just has never worked. Capitalism, however, where it means if you work hard and you work smart, you'll get rewarded. And there are many, 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 many examples of it working and working quite quickly. Think about Japan after World War II. Think of Taiwan. Think of South Korea. Okay, think of China. Okay. So my point here is capitalism works, capitalism is right, but capitalism is still flawed because we haven't figured it out yet. So to have to debate things like how do we tax people, how do we redistribute income for the best return for society? Well, we're still trying to figure that out. So Europe is capitalist but more socialist. Canada is capitalist but more socialist. New Zealand and Australia are different from Canada. Canada is different from the UK. The UK is different from Europe. Europe is different from the United States. The United States is different from China and Taiwan and South Korea. They're all different forms of capitalism. Okay? Some are working better than others. And if we go do it right over the next 100 years and we ask ourselves the tough questions, what part of capitalism is working and what is not working and how do we fix it? Okay? And one of the things that is wrong with capitalism or that needs to be addressed is income inequality. And how do you get out of the poverty trap? Like, what do you do to someone that could have $1,000 a month given to them for free, but they can't fill out a piece of paper, provide identification, and 2 years of tax returns? How do you help somebody like that? That's the bigger problem. You're like, dude, we're talking about over the course of the next year and a half, you're going to get $20,000 for free, and you don't even earn $20,000 a year. And like, dude, $20,000 for free, just fill out one piece of paper. I can't do that. Show some ID. I can't do that. Just 2 years of tax returns. I can't do them. You're like, wow. So now you got a problem, right? That's the bigger problem, I think. So how can we tweak capitalism to address some of these, right, concerns? Because that is inefficient. And I actually wrote a paper at Harvard on how to redistribute income properly to create a more just, fair, balanced economy and society. And the key to that was entrepreneurialism. Okay? And like, I don't know if it was an example or not, but I remember thinking about this a lot. And I thought something like Uber or working on Upwork or whatever you use where you can freelance. So you're a freelancer, right? You do graphic design, or maybe you do Uber and Uber Eats or something like that. The cool thing, for women appreciate flexible work schedules because very often women have the burden of having to take care of the kids and taking care of the grandparents. Men are fat, stupid, and lazy, and we drink beer, watch football, and talk about how hard we work at work, right? Oh, I'm so tired. You take care of grandpa and the grandkids and the kids and clean the house and do the grocery shop and right? So men are stupid and lazy. Women are hardworking, but because of all of those burdens, they need a flexible work schedule. And so why wouldn't you want something like, remember how the government was against Uber? Being an Uber driver was bad. Catching an Uber at the airport, you could be arrested for it. Remember that? You had to like sneak into an Uber. I'm like, why? This is what people want, flexible schedule. Work exactly when you need and you don't have to ask a boss for permission. I've only had like 2 jobs in my entire life, and I always thought like, I have to ask my idiot boss permission to take time off? Why can't I just take time off when I want? Like, screw you. What are you, my mom? No, I'm your boss. Dude, you're an idiot, right? Like, dude, if I don't get my job done, fire me. But I'm tired. I want to take a day off. I don't have to ask you if I don't come in today. It's all right. I took care of my schedule. I called my assistant, told her to clear everything off and reschedule everything. I'm taking a day off. I'm going fishing with my son and my daughter. Like, why don't I have, So imagine like you were able to just like work when you want to work. You want to work in the middle of the night? Great. Boom. Do it. Okay. So you had to, but the government had to think entrepreneurial. But they're not entrepreneurs. They're government. What kind of idiot would work at the government? Now, technically, I worked at the government for 2 summers. This was part of my NASA days. And I sat down for the job interview. I got hired. I was an aviation research assistant at that NASA Ames Research Center in Mountain View, California. And after the interview was done, they're like, okay, we'd like you to start. When can you start? And I gave them that date. And then they said, how long is your commute? I'm like, what? How long did it take you to get here today? From home? Like, you mean I get in my car, drive here? Like, how long does it take me to go up the 101? Yeah. Oh, I don't know, 20, 25 minutes? Okay, let's just say a half an hour each way. I'm like, what? They're like, yeah, we're going to pay you an hour every single day for your commute time. You're going to pay me to drive to work. I'm in. I accept your job offer. I don't know how much you're going to pay me, but no one, what? Like, you're going to pay me my commute time. Thank you, government. How amazing is that, huh? But how stupid is that at the same time? Yeah. By the way, what a cool job. I got some really killer stories about NASA if you ever buy me a drink. Okay. Sorry, I'm running out of steam big time. All right, so Aussie dollar's coming down. All this has been planned, but remember I said up and down or down and up today because people are not going to understand or they're going to disagree with what today means. So be careful. It's going to be like this until March, until people realize they're wrong in their position for March. And that has to do with the rate hike, not the end of QE. And by March, I mean the Fed meeting. We'll look at euro dollar here. Euro dollar's done nothing for a very long time. I am short this one at the top. I'm short right here. And yeah. Done nothing. Sorry, I don't know if you can tell. I keep like almost vomiting. It's so hot in here, I'm sweating. I'm going to try to hit the mute button before I puke. But yeah, I don't know if you've noticed, I've been burping a few times. I'm like, uh-oh. Here's our USD kitty CAD trade now. It started out ripper hot because of the good CAD number. But look at these 2 trade plans that we have. Okay, this started Sunday, so this was a buying opportunity based on seasonality. I'm not talking about this chart. We just knew on Sunday, the first day of trading, that was a buy. Normally I wouldn't buy in that situation, but I'm doing something different. How many people here, Pete, it's vertigo. I don't think COVID gives you vertigo, but maybe it does. I might actually have it. I had workers in the house last week that have now reported to me that they have COVID and that they're in isolation. So I might have COVID. Does anybody know? Do you get vertigo from COVID? That's what I have. I don't have an upset stomach. It's just I'm seasick. Okay. Thank you, Victor. Okay. Right on, men. All right. So there's that. Is that right, Cisco? All right. So I should test. I actually have a test. We have tests in the house. Ah, shit. So I got COVID, huh? That's what it is, isn't it? Fudge, dude. Yeah. Yeah. A threat. Oh my God, that's what it is, isn't it? Don't believe the hype is unequal. Can I get this through to you? My 98's are booming in my trunk with funk. All you punks can't stop my dunks. Is that what you mean, man, in action? Yeah, Johnny, I'm sorry, but you, yeah. But anyways, yeah. Okay, so, yeah, thanks, Emily. So anyways, oh my God. So yeah, that makes sense. Well, at least I'm doing my live streams. I'm doing my job. My problem with the vertigo though is like, look, if I have a headache, I'll do my job. If I feel nauseous, I'll do my job, but I'll have a bucket nearby. If all this kind of stuff. If I have a headache, maybe I'll be quiet. I'll turn the lights down and I'll do my job. It's just a problem, okay? It's a problem when you can't move your head. Like I couldn't even walk 10 feet. That's it though, huh? Yeah, so that's it. Right? Right on. Thank you, White. I have a decent immune system, but whatever. This is only what I would have gotten it last week. I don't know when you peak. Does anybody know? I would have got it. I'd have to look. Wednesday of last week. Yeah, oh, I don't disagree with you. I bet you have it. Why would I not have it? Especially if it's Omicron and I had two workers in my house. I'm in peak mode right now. Dude, do I get a boss up whoop whoop for that? Am I doing all right? Like I know I'm whiny in a little bit, but dude, I'm here. Yeah, that's right, Beta. But the interesting thing is I don't leave the house very often, so yeah. Yeah, bossing it. That's good. Yeah, the hottest FX supermodel. All right, cool. I do feel terribly sleepy and yeah, shit, I got it. Damn it. I'm triple. I got my three vaxes. I'm triple vaxxed up. Vincent had to see an ear and eye specialist. Sir, you can put your pants up. Like what? Really? Oh, ears and eyes. Oh, okay. Okay, let's do some yens. resting. Sounds like it's Omicron. Yeah, I called it just the other day, fake COVID, diet COVID. So it's all right. I'll take my dog for a walk. Okay, Beast. Okay, I've been cautious about Beast since we hit target. Okay. Riding the 4H21, that's all right. So maybe we can get a push late today. Thank you, Brinsley. So Forex Pipper says, right, that resting, cigars, and wine will make things better. I'm cool with that. I have a box of Monte Cristo Epics coming and a box of Undercrown on the way. So that'll give me something to do. So we're projecting this out. I think a dip into here and then a rise up would be the way that I would prefer it. Okay. Cool. Let's go Aussie. Aussie's weak. Whoa, way different, huh? Check this out. Okay. This was a sell on Sunday. It came down, hit this, which is sort of it's a weird, questionable, odd place for the bounce. Yeah, it's the 55, but you know what the 55 means? A top's a coming. Now, usually it's a double top, but this went up and hit the weekly projected high. So on this day, if you were a bull, the projected high was 84.31. I'm not making this up. So anyways, bears sold where a bear would sell. They might have gotten taken out, but they sold. And I sold that, by the way. They came up, went higher than a bear would have liked, but that is where a bull would take profit, and they did. And bears have taken over again. But I'm not bearish on this pair, I'm just bearish on that currency. So if anything, it'll kind of fart around, maybe come down in here and then kind of work its way up. And not go up because it's not bullish, but maybe go up because that's bearish. Are traditional currencies going to go extinct? Not this year, Frank, so don't worry about it. I think gold is more in trouble because of cryptos than dollar. Dollar is interesting because the dollar basically rules the crypto world because it's a reserve currency, or the reserve currency. And if anything, since crypto has come along, is more the reserve currency than ever before. So it's kind of a strange situation. I would eat healthy. I always eat healthy. Okay. So anyways, my God, I'm thirsty. Hang on. I don't get a lot of Z and D, but I get a lot of B's. What's your take if risk on short dollar? But that's not going to happen for a while. Dollar's going to weaken in February. It's going to strengthen in March. So the better thing is to short yen. I sound and look healthy? Cool. That looks like I messed up my charts. Hang on. I guess we can isolate CAD here after the good news. Do you see a possibility of like a head and shoulders type situation? You got to mark the neckline. And then you mark this. And then you set the break. And so you could worry about this rollover here, even though this is a good news. The very least, you could go for this if you're a bull, but don't be shocked if it does this first. It might have a down week despite the good news. Or it just won't go up as fast as you think it will. Is it possible to purchase the course card loaded? I don't know what that means, but you have to have some form of credit card. Do I get a ringing in the ear? No. Difficult swallowing? No. Not yet. Let's us do some commodities. You guys want to do gold, oil, and Bitcoin? Then click the thumbs up button. Huh? Click the thumbs up button if you want to do that. Huh? I'll keep an eye on you. Keeping an eye on you, huh? All right, so we're almost at 100%. So that's pretty good. Thank you for that. That might be true, Pete, or things like China decides to buy oil not in dollars. So, yeah. So I think I think it'd be interesting. I'd like to buy $1 billion worth of oil, put it in storage, and create a currency for it. So if China wants to buy oil from Iran in my currency, I don't know. Someone might get mad at that. Yeah. Well, Forex Pipper, if I have it, I'm one of those guys that I just don't get sick. So when I do get sick, it's a problem. Like, it's like, really? So I might have it, and I'm stubborn. I'm Canadian. Dude, you have to understand I'm Canadian. I'm stubborn. So I'm pretending right now to not be sick. And I'll push through it. I'll work hard. I might quit early though. I'm not gonna go another hour. So I'm gonna end in 15 minutes. But dude, I'm sick. But I push through it and I'm still a happy guy. Why do I have to be grumpy and sad if I'm sick? Now, if it's day 12 and I'm still sick, yeah, I'm gonna be grumpy and sad. But like today here, look, I'm with you. I'm with my friends. You're supporting me. You're giving me the energy I need. And then I'm going to run out of energy. I don't want to move a lot because I'm dizzy. So I'm going to sit in my movie theater and I'm going to play Far Cry 6 because I don't have to move my head much. And I'm going to have a mediocre day. Now, I get depressed because I'm not trading. Where I get depressed is when I'm not trading, I'm not making money, I'm not working. So I just have to just say, well, it's an NFP day. It's weird. I'm going to come back maybe around 3 o'clock. I'm going to see if I can get some front run trades over the weekend, come back Sunday night, and get ready to trade another week. And hopefully I feel better, and hopefully the market sets up. I got a lot less risk events in my face. Fed meetings aren't for a while. We already know what's going to happen, and we're already preparing for March. And so I'm just going to go back and hope my seasonality kicks in. Okay? Okay? Yeah. Well, the thing is, I like to do my job and such. I do walk every day. I meditate every day. Right. I do 1,000 crunches and I plank for 30 minutes. Bullshit. But I do. I walk my dog 30 yards every day, mostly. Dude, but I've lost 22 pounds since September. 22 pounds. My wife took some books that we had when my kids were small, when my children were tiny, and I would read these books to them. Well, we just sent them off because we got some family member that's having a baby. Like, good for you. Have these books. So we sent the books off, and it was a bunch of books, and we put it in a box, took it to the post office, and mailed it off, and it was 10 pounds. It was a big box full of books, and I'm like, dude, I lost 22 pounds of ugly fat. It would have been 2 of those boxes. I'm like, holy crap. Yeah. Yeah, thank you. Thank you. I did it because Cisco and I were hanging out at a bar in Manhattan, smoking cigars and drinking fancy beverages, fancy cocktails. And he says, dude, you're chubby. Cisco's like, dude, you don't look good. You look fat. Your face is fat. Like, what? What do you mean, Cisco? He's like, you look terrible. I mean, seriously, it's embarrassing to hang out with you with this, like, what is that on your face? What is that? Your head's going to explode. Do you feel all right? And I'm like, I swear to you, Cisco, I'm going to go home right now and I'm going to lose at least 20 pounds because I respect you so much, Cisco. And I did. And that's how it went down. He told me I looked like that girl that exploded in the Wizard of... no, what was it? Charlie and the Chocolate Factory. He's like, you look like that girl that turned purple and fat and round. And then, yeah. I'm like, really? I look like that? Oh, my God, Cisco. So... yeah. Oh, yeah. Thank you, Cisco. Appreciate it. And then Johnny leaned forward and he's like, yeah, I was going to say something. Yeah. Johnny's like, I was going to say something. I'm like, oh, my God. I thought it was your weird webcam, Wayne, but gee whiz, what are you doing to yourself? So anyway, so you guys inspire me. All right, so let's do some commodities and let's get out here. Right on, men in action. Yeah, I feel bad. I don't think FX Street likes me anymore, and I feel bad about it. I think about it often, but I do nothing about it. But I'm here every day for you guys. I don't think they like me anymore. All right. So here we are, my oh my, WTI. See a VJN? FX, no, wait. Well, you and I have a good relationship. I don't know. I used to talk to the management all the time, and we used to plan like special events, and they used to promote all my webinars and stuff like that, and it just doesn't happen anymore. So I think I lost the love with the management. But they're good people, though. I respect FX Street, and always have. All right, so here we are, my oh my, WTI. There's some shortage issues again. Remember today at 1, I believe there's the rig count. Do you guys follow inventories and rig count? Let's do this. EIA. Energy Information Administration. So if you don't know anything about oil, don't worry about it. There's a whole department inside the government that knows everything about oil. And coal, and nat gas, and so on and so forth. Okay? And where it'll be in the future. Okay? Reserves yet to be drilled. Okay? Futures prices and production, so I look at things like short-term energy outlook. Okay? How much we're producing, are we producing more, are we producing less, are we going to produce more or less in the future? Okay? I already told you I did an outlook for 2022, and in that report I talked about what I thought oil prices were going to do and why. And one of the things I talked about is I estimate that we're going to produce a million barrels more per day in the United States alone. Where do I get this type of information? The EIA. You can also go to the IEA because they also want a very similarly named organization. The International Energy Agency. And you can find out a lot about energy through their analysis. Nice little website, right? They're much more forward-looking, but you can find, okay? You can find information here about, right, like supply and demand for oil. Global oil production is poised to outpace demand. I'm done. You see? They have PhDs and quantitative analysts, and they tell you, after spending millions of dollars doing research from data sets and samples from all over the world and all different types of industry, and they tell you right here, boom, prices are going to be less up than down. Okay? Global supply would soar by 6.5 million barrels per day next year. Not up. I said sideways. Cool. What else could you do? Okay. Oh, what? They produce reports? Uh-huh. Do 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 do. Mama 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 bu 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 bu. Do 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 do. Wayne, how do you do your macroeconomic research? I don't know. Let's take a look. OPEC says the global GDP growth forecast in 2021 is revised slightly down to 5.5 from 5.6 in the previous month's assessment, while the 2022 growth forecast remains unchanged at 4.2. The U.S. is still likely to grow by 5.5 in 2021 and 4.1 in 2022, unchanged from last month's assessment. Similarly, the Eurozone economic world oil demand kept unchanged. Industrial production in China. World oil supply. Dude, look at this. I almost laugh at people, including experts, that spew out BS opinions and generalized guesses. Well, I think this. And I say, well, I was taught to cite my sources. How did you get to that conclusion? Why do you think the thing you think? Well, blah, 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 blah. They don't say, well, for example, after going through the IEA, EIA websites, something really struck me, right? There seems to be similarity between those sites. And then I take a look at what OPEC says and I smash them together. That's how I get my opinion. So, for example, after looking at the research that OPEC did over the general, macroeconomic situation for 2022, they break it down into the demand for oil next year and the supply of oil. Having looked at this information, right, all three organizations estimate there'll be slightly more oil than there is demand. There'll be slightly more supply than demand. Not dramatic. We will still have a global booming economy and stuff, but the thing is, well, we will have enough. There will be enough to go around for everybody. So I believe oil prices will generally be stable. There'll be some ups and downs throughout the year, and that will be related to exogenous shocks. or more likely seasonality. But generally speaking, oil will be stable in 2022. After doing research, looking at the data sets supplied by OPEC, EIA, and IEA. And all of a sudden you're like, that's actually smart. And so many people on TV and so many people in the newspapers and magazines and probably YouTube streamers, all they have is like BS opinions. I don't value opinions. I don't really care. I know the research I've done, and I come to a conclusion. I don't have an opinion. I have a conclusion. And so since I'm responsible for my trade and my trading history, I don't care about someone else's opinion. I really don't. It's not that I'm arrogant. I just don't know if they have the same work ethic as me. And so most of the time, it's just what they think is work is just really guess. They're just mediocre. Okay? Like, put it this way. Most people think they're above average. Most people are mediocre. So I don't care if you manage $1 billion. I need to do my own work. And I don't have an opinion. I have a conclusion. Okay? And so all I'm preaching here is not that I'm better or something. I'm preaching to you that you need to have your own work ethic. All the information's there. Did you see, like, honestly, that took me less than 10 minutes. And I can give you key stats from 3 different government organizations, 3 different institutions that have spent millions of dollars doing research. And in less than 10 minutes, I can give you the basis of a conclusion. And not some BS opinion of what I stink about oil. Wayne, what do you think about oil? I get that question a lot, right? Hey, what do you think about oil? What do you mean, what do I think? Oh, have I done supply and demand analysis of the energy complex? And based on that, what would the fundamental and technical trade setups be? Oh, yeah, but what do I think about it? I think it's real nice. Okay? So anyways, that's what I'm preaching. The other thing is, I want you to love your job so much that if one day you get out of bed and you vomit and you smack your head into the wall and then you vomit again, you say, you know what? I'm going to do a live stream on YouTube. And even though I don't feel well, I'm going to do it at least 2 hours. And then I'm going to go vomit again. Do you love Forex that much? Are you passionate about it? I've taken you guys with me all over the world. From South Africa to Japan to many cities in China and Hong Kong and Paris and London and all over the United States. Wait, I forgot Canada. Yeah, don't forget Canada. All over the United States. And sometimes I'm in Florida one day and literally 2 days later I'm in Wisconsin. And I bring you with me. I've traded with you guys through tornadoes, through earthquakes. Do you guys remember that typhoon? Class 10 typhoon. And I'm on the 140th floor of a skyscraper in Hong Kong. I did my live webinar. It was great. And then I went swimming. And the water would because the building was swaying so much, the water would leave the pool and go up on the glass. Like 2 or 3 feet up the glass. And I'm swimming in the pool. So I've taken you everywhere. There's been times when I've had deli belly and I laid on the floor and used my mouse on the floor and I would stare up at my charts and I would live stream. Headaches and colds. I took you guys to Harvard with me all summer, did live streams out of the dorms. Okay, out of Kirkland Hall, where Facebook was invented by Zuckerberg. His dorm room was just literally like right around the corner, like around the corner. You have to go in a different door, but whatever. So anyways, I take you with me and I trade always because a trader trades always. And then when I feel blue, it's like I just can't get out of bed because the world is spinning. So that's where I feel blue. But otherwise, you guys give me the strength to get out of bed and do what needs to get done. And I appreciate you in my life. I appreciate FX Street in my life. When I first started trading, the only Forex source there was FX Street. And then when I first met with them to do a webinar, webinars didn't exist yet. So when I agreed to work with them, the one thing that we had in common at that time is that I don't want to do just another thing. I want to do something special. And we said, well, we could use these webinar rooms. Back then it was HotCom. By the way, I paid for it. I paid, I don't know, $2,000 a month. Anyways, I paid for the webinar room. FX Street loaded it with 1,000 people. It was awesome. And I said, I want to do something different. I want to stream my charts live. I want to do it through the worst trading conditions ever, and that's non-farm payrolls. And the reason for it is scumbags and scam artists use non-farm payrolls as a get-rich-quick sales pitch to people. I'm like, I want to do that because if they're with me, it's good publicity and it's entertaining and I can truly educate. But also if they're with me, they're not with some scumbag scam artist, get rich quick idiot. So it worked. It was awesome. It was like a double dip. And so that's what we did. And when we do this again, it'll be for the 190th month. To give you an idea, I believe that's more than 15 years. So thank you for being in my life, FX Street. Thank you for being in my life, you. I'm talking to you. Thank you for being in my life and giving me the strength to get out of bed and doing what gets done, even if I feel less than 100%. So I'm passionate about Forex and I'm passionate about you. And I will see you next time. If you want to hang with me more, if you want to hang with me actually every single day, visit FXBootcamp.com. The coupon code is Renew 2022. You save 80% off. It's just $77 to join FX Bootcamp. And then, of course, you can upgrade your account to join any of the live groups if you want. But if 60 hours of videos are probably worth $77. If it ain't, then So, without further ado, let me say goodbye properly, eh? Peace on earth. May the pips be with you. May your profits be above average. Maybe I will see you at Traders Way. Open up an account at tradersway.com. I do a live stream there every day for customers, for clients. The link is in your back office. Tradersway.com, open up a demo, takes you less than 30 seconds. The second thing you do is visit FX Bootcamp, use coupon code RENEW 2022. You'll save 80% off. And 3, subscribe at FX Street, and I will see you every month. Cool. Have a wonderful weekend. Don't forget, set trades up today for Monday. So that's what I'll be doing later today. Like I said, I'll probably end up playing video games for several hours. And then maybe around 2 or 3 or certainly by 4, I will be back at my charts looking to front run next week. That's what the Wayne do. And after that,